Everyone thinks the 1997 Asian financial crisis was bad luck. It wasn't, it was a masterclass in how incentives destroy economies. Exhibit 1, Thailand, mid-1997. The Thai baht had been pegged to the US dollar for years. Stable, predictable, which meant currency traders saw a one-way bet. Borrow dollars cheap, convert to baht, collect the interest spread. Rinse, repeat. Nobody in this story is stupid, look at what they were paid to see. The problem, Thailand's foreign reserves were evaporating to defend that peg. By July, they couldn't anymore. Exhibit 2, Contagion. Within weeks, the crisis jumped borders like a wildfire with a mortgage. South Korea, Indonesia, Malaysia all had borrowed heavily in dollars. When their currencies tanked, their debts didn't shrink. They suddenly owed twice as much. Foreign investors panicked and pulled capital out. It wasn't rational fear, it was rational math done very quickly. Exhibit 3, the IMF arrived with a checkbook and conditions. Bailout money, yes, but also raise interest rates, cut government spending, let failing banks collapse. The theory was sound: stabilize the currency, restore confidence. The reality was brutal. Unemployment spiked, poverty exploded, social unrest followed. Here's what matters. The crisis revealed how tightly woven global markets had become. A currency bet in Bangkok rippled through Seoul, Jakarta, and Manila. Capital flows that took months to build could vanish in days. The dominoes didn't fall because Asia was weak. They fell because everyone had bet on the same outcome, and when that bet inverted, there was nowhere to hide. The bailouts worked eventually, currencies stabilized, growth returned, but millions had already lost their savings, their jobs, their security. The crisis proved that financial contagion doesn't require stupidity, just interconnection, borrowed money, and the moment when confidence evaporates. That's a pattern worth remembering. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe for more breakdowns of how global finance and geopolitics actually work, because understanding the incentives is how you see the crisis before the headlines do. This video is for educational and informational purposes only and is not financial advice. Always do your own research.